G'day everyone, welcome back to Risk Biscuits. I'm Michael, I'm your host. Thanks for joining in and checking out the show. If it's your first time, this is just a kind of a laid back chat between traders and investors about the market, nothing too serious. I've got a very special guest today, excited to get him on, great stories to tell and an interesting sort of role to play in the markets. Gabe Bernarde from Viceroy Research. G'day mate, how are you?
Very good, thanks. Very excited to finally get to do an Aussie podcast again. It's been a long time.
Yeah, cool. Yeah, so let's just chill out, have a relax, and enjoy the program. So just to get before we get started, just some sort of standard butt covering type stuff. So I've just got Viceroy Researchers disclaimer up on the screen. Obviously, this is just general in nature. We're just two guys having a chat and having a drink. I got a beer and Gabe's got a gin and tonic, I think. So don't take anything that we say too seriously. And if you need financial advice, go somewhere else and seek it. And I'll put up the other one somewhere here. Sharing. And then obviously, it's probably a good summary of myself in terms of where I'm at, in terms of the market, what I know, what I understand. So
Same.
definitely don't listen to anything I say. It's all just general in nature, and we're just having a bit of a chat and some fun. So, all right, let's get on with it. So, maybe we start with, I guess, like obviously I've connected with you over Twitter, and I think I know a little bit about you, but obviously, that might be things I've invented and not factual. So let's just sort of, I guess, talk about maybe what I think about, I think I know about you, and then just kind of go from there. So. You're a short selling guru. You're at Viceroy Research. You guys are basically fraud hunters, chasing down all the bad guys in the market and telling us all about them. Is that kind of a fair assessment of who you are and what you're up to these days?
I think that's more or less the image, yeah.
Yeah. Okay, cool. So that's really interesting. It's obviously kind of a very niche area of the market. Most people are kind of long on only buy and hold or trading, that sort of thing. Obviously got your sort of long short type portfolios, but sort of full-time short sellers are quite special. So maybe we I guess take a step back a little bit and just sort of go back to the beginning. Like, how did you kind of first get interested in investing in markets and that sort of thing?
Yeah. So I guess, well, firstly, I wasn't really interested in investing in markets. I was dragged into a. Sorry, mate. I'm just gonna have to pause real quick here. I'm just gonna cancel these calls. Let me just put my phone on silent. You can crop this one.
Cool.
I put everything there.
Go ahead.
All right. So I started off as a pretty sort of clueless 18-year-old finishing high school. I took a cadetship role at Ferrier Hodgson when I was still in year 12, and that kind of dictated my university degree as well. So I studied accounting, and I worked in corporate restructure and forensics team essentially. And I guess that's the back end of what I'm doing now. Whereas the two sides of the coin are, when a company goes bankrupt, you have to have someone there to deal with the fallout. And now I'm on the other side of the coin where I'm actively looking for those companies. And I guess it helps when you're calling out bad businesses and calling out frauds to have a sort of empathetic experience sitting on the back end of those deals and knowing how much damage, not just that you're creating in financial markets, but to people's lives and their job securities on the other end. It's like this really hurts people on the back end of doing what we do. And I think it definitely helps having that perspective now, like having to, go through mom and dad shops and fire people because someone committed fraud at, obviously a much smaller scale, but yeah. So that's how I got into it. I mean, it got to the stage where I was writing so many of these investigations for the courts and for ASIC on behalf of the restructuring administrator. And my belief was that these were silver platter frauds, and they ran anything from unregistered managed investment schemes to sparky shops and like contractors.
Yep.
And I would write these investigations for ASIC. Obviously, we don't have the cash to pursue investigations to the degree that it needs to take to court, right? Or to pursue a criminal conviction against a director.
Yep.
But ASIC would always come back and say, look, it's small fries, we don't care. I don't think I ever worked on a single investigation there over 6 years where ASIC took action against a director.
Yeah, right.
There were directors of $100 million plus blatant frauds that I worked on that are still CAs. And I think that was probably the most frustrating experience, to date, because I couldn't really talk about it.
Yeah.
So I think partially Viceroy started because at this point I was like, well, I'm going to start firstly calling out companies and markets that I think are fraudulent. And they weren't, some of them Australian, but also international.
Sure.
And that was really just to build a portfolio that I could then take onto job applications and say, look, here's some of my ideas, here's my thinking, here's some of the work I've done. And that was Viceroy at the inception. I wasn't really taking big positions on these trades,
Yep.
And then all of a sudden I was doxxed, sued, and now I'm really unemployable anywhere else.
Yeah.
So I'm glad I made it work.
Yeah, for sure. So obviously people that know you, there's a bit of back history there. There's been some issues that sort of came up a couple of years ago where you were unfairly targeted by the regulator and that sort of thing. And I'll sort of let you decide how deeply you want to go into that on the show. But there's plenty of information in the public domain if people have got sort of interest in exploring that further.
Well, let's take that back. Let's take that back even before, right? Because this is not the first time. For example, like I understand in our industry it's kind of contentious what we do. We don't really think publishing a short report is overwhelmingly different from a Goldman Sachs sell side analyst putting a ridiculous buy note on Wirecard or whatever the fuck, right?
Yep.
But the protectionist stance that a lot of the regulators take to activist short sellers is pretty concerning, and it's obviously in the space of Wirecard that was abhorrent. Not only did the regulator BaFin persecute short sellers, it banned short selling in the market altogether. Yep. It basically worked with Wirecard to persecute these short sellers, and Wirecard paid for spies to follow us and dox us and find out where we lived and whatever else. And then the regulator's staff were actively trading securities of Wirecard.
Wow.
While it was being internally investigated by KPMG.
Yeah, right.
So that's the inception, right? Like that was really the turning point for Viceroy becoming I wouldn't say legitimate, but having a standing amongst regulators was holding our ground against BaFin for so long that the outcome was that they had to fire their entire executive suite.
Yeah, so was that really your kind of claim to fame, for a lack of a better word, in terms of like, Viceroy's serious. We're not just, some sort of fly-by-night firm. We've done our work. We know what we're doing, and we're sort of happy to stand by.
Yeah,
our comments.
I think that's set out MO because, I think a lot of we like to publish on a project, and we don't think that it's a particularly we think it's very disingenuous to say, look, we're short Adler, for example. Our target price is 0 because it's a giant piece of shit, and then sell and then cover our shares and then not write about it after a week.
Yep.
So I think that we definitely feel, firstly, if we were ever wrong, and it's not happened recently, that we would then have to either correct our statement, but to just leave something alone after making this, a research statement that says, we believe this is objectively a 0, is kind of disingenuous.
Yep.
So we do like to follow through, and I think that stemmed from these hard lines we have to take in like regulator battles, essentially. And then the difficult ones have obviously been Germany, the South African regulator, and now the Australian regulator, which is the most concerning of all, especially for me because I'm Australian.
Yeah, 100%. And so, like, obviously, there's a couple of firms out there that I guess have a bit of a reputation of, pumping out a report and sort of being in it for, I guess, the reverse of a pump and dump type strategy, which is obviously not what you're doing. If you go on your website, there's lengthy research reports around all of your positions and various updates and that sort of thing. So it's pretty obvious that you're doing your homework.
Yep.
And I get the sense from talking to you that like part of your motivation, obviously coming from a restructuring background, you've seen the pain and damage that's caused. I mean, I come from an accounting background myself, so I've done
Yep.
some restructuring work and, particularly through the GFC, was called in to, give people lots of bad news about losing their jobs and that sort of thing, which is pretty shitty experience. And I've certainly seen my fair share of frauds based on where I live in Australia.
Yep.
And as you say, a lot of those go unpunished and in some ways rewarded. Well, certainly financially rewarded.
Mm.
And if there is any punishment, it's sort of a slap on the wrist, and they just sort of continue on.
Because in a lot of occasions, right, we have to define. For example, there's a fraud by inception and a fraud by consequence, right? If we're talking about some guy pulling up his bootstraps and fucking running a business insolvent while paying all his wages and his workers until the point that it's no longer tenable, that's by consequence. If there's a sudden business downturn, this guy's not running out there to steal people's money. If we have some unregistered managed investment scheme that is created some absolute bullshit like fucking, I don't know, forestry scam or whatever, and then this is going from retirement village to retirement village and soliciting super funds from old people, and then buying Ferraris with it. That's fraud. That's by inception.
Yeah,
and I think that firstly, I think you have to define that. But yeah, again, even in that consequence, right? If it's a fraud by design,
yeah,
someone's won.
yeah,
Like some guy's walking around there, still a CA with his fucking Ferraris.
yeah,
What are we doing?
yeah. It doesn't make sense,
No.
and I've seen, obviously sort of various stuff around, things that have been reported to the regulator and even stuff that I've reported to the regulator myself over the years, both in terms of the tax office and ASIC, and
Yeah.
a bit like your comment, I don't think anything's come of any of those investigations. So it kind of feels like part of your motivation for being a short seller is that you feel like you're doing good in the world and trying to sort of make a difference and, have a positive impact by highlighting these frauds early. Is that sort of fair?
I don't think it's fair. I don't think it's fair to claim that. I'm not trying to be like some market evangelist. I'm definitely here to make money.
Yeah,
but
sure.
I sleep well at night knowing I pulled the band-aid off early.
Yeah. Okay.
Right.
Yeah.
If we're talking about letting these things fester, right? Like a Wirecard. Well, we wrote about Wirecard in 2016. It collapsed in 2020, at which point it had grown 10x almost.
Yeah.
Imagine it had collapsed as a tiny $2 billion fucking euro fintech. No one would have cared. Wouldn't have impacted anyone. And now, you skip forward 6 years, this is the largest financial institution in Germany. It's bigger than Deutsche Bank.
Yeah, right. Yeah.
So, chop it off at the joint, get on with it.
Yeah, that makes sense. Okay. All right. So you're at Viceroy, and that's a small team. That's you and a couple of others. Is that right? Or how does?
Yeah. There's three of us.
Yeah. Cool. And let's talk about sort of, I guess, what you're targeting. So are you just looking at the market on a global basis, or is there sort of specific jurisdictions you're interested in?
Well, I think, to be honest, I think it was always a very easy shooting fish in a barrel game. Like I don't know that we're not particularly fantastic analysts. We're not big macro guys. We're just inquisitive enough and we have enough time to just hone in on one sort of thing that doesn't make sense and just are really committed to finding out what's the underlying thing. And that was easy, pre-COVID, because we didn't have this sort of meme stock generation.
Yep.
Whereas as soon as COVID hit, we really had to sort of rethink not only our sort of position and where we stood on meme stocks, and most of them are just giant pieces of shit again,
Yep.
but also how we go about avoiding ever being in a situation like a GameStop or an AMC.
Yep.
And really it was like, well, what's the boringest industry in the world? And that was German real estate at the time. So we came out with Adler. And then, you know, we kind of played it by ear at that point. Like we started looking at more German real estate businesses. We looked at Swedish real estate businesses, SVB. We looked at UK real estate entities, which was Home REIT, and they've been absolutely great successes. So at that point, it was like, well, let's move away from these sort of hard, like slog win meme stock targets. You have industrials and real estate that are so like are considered so safe by complacent sort of asset managers that just sort of fly to safety to these stocks, especially during that COVID era. And they don't realize that these things are just rampant frauds.
Yeah. Okay. Yep.
Right. The idea was that, especially in real estate, there's a real asset backing this. There's things trading at book. It's fine.
Yep.
No, it's super easy, right? That's the biggest pitfall of those investments. Like Adler, I mean, yeah, so we timed those shorts at a very good time, right? At the bottom of the interest rate cycle.
Yep.
But they would have collapsed anyway. Like they were frauds.
Yeah.
So I think that we've kind of riffed off that and we're still on that train, but we're not really like, I mean, I'm still not a real estate expert, realistically.
Yeah.
I
Okay.
just know how to smell out shit. And most of these examples are just like, you know, it's very easy to go pick out a financial statement, run your analysis, think you do that better than everyone else, but really everyone's doing that exact same analysis.
Yep.
It's very difficult to go deep enough into your research where you're collecting your own empirical data to actually make sense of what is coming up on that analysis. And I think that's where a lot of the sell side falls short on.
Yeah, right.
So if we're talking about mines in Mozambique, have they visited those mines? Probably not.
Yep.
You know, have they visited these properties that are backing Arbor loans? Probably not.
Yep.
Because you get shot at them a lot of the times, unfortunately, but there you go. So I think, yeah, and you'll find that in our reports, like we don't do big, lengthy, like financial analysis sections.
Yep.
Our report is layman's. We work a lot on the operational sides of the businesses and try to make sense of that.
Yeah. Okay. And then, I mean, in a lot of ways, that's what's being overlooked by everyone else, and also
it's hard.
It's hard work, and it's also
it's
the clearest.
consuming.
Yeah, and it's also the clearest sign that something's wrong. You know, like you go to a mine, and it's closed. That's
well, you should have a very good idea from your numbers what the picture should look like when you find this data, when you go and observe the operations. And if it doesn't look like that, something's off.
Something's wrong. Yeah. Okay. So then let's talk a little bit about sort of, I don't do anything from a short selling, single name kind of space. So I guess what are you looking for in an investment, and sort of how does the research process work and evolve? And like, are you just doing your own sort of detective work and then bringing that to the team, or are you collaborating, or, just, I guess, how do you end up going from, I think I found something that might be worth looking at, to putting on a new position?
Well, I think the lead generations is quite, Viceroy is quite a self-sustaining machine now. At the inception, for sure, like we were doing most of our own lead generation. There was a lot fewer reports a year because it was, this takes a lot of time. But now that we kind of have a broad follower base, we get a lot of mostly anonymous tips of, hey, this company should be investigated. This is what we think's wrong with it. You should have a look.
Okay.
So I guess that we have like our own little triage from tips that come in.
Yep.
But at the absolute forefront, we need to have a story that's too good to be true. So take SBB, for example, big real estate investment company, manages properties almost exclusively leased to the government.
Yep.
Thinks that they have the most stable rent ever, leveraged
Yep.
to the hilt, and
Yep.
just the CEO goes out there and says, we're raising dividends every year for 100 years. Right? That's too good to be true. It's the most heavily invested Swedish stock on a retail basis, despite it being the boringest industry in the world.
Yeah.
We like that. Like, there is something either this is the best long we'll ever make, right?
Yep.
Fundamentally, that is the best value investment we'll make. If we go in and we find nothing wrong with that, we would probably just go long it.
Yeah.
But usually that's not actually happened today. But at most cases, we'll find something very wrong, and we can pick up those falls quite easily.
Yeah. Okay.
But that, like, fundamentally, I think that is the biggest key thing. We don't like getting into other really crowded shorts.
Yep.
I think Arbor was, it's probably an exception, but even at 20% short interest, it's not that. I don't think that that's overshorted.
Yeah. Sure.
Yeah, and obviously, then we need to see, look, is this big enough? Is there enough volume? We love to trade debt. If we can short debt, that's perfect.
Okay.
Um,
Why?
I think you can margin debt to a much higher degree.
Okay.
Like,
Yep.
so we can get a big sort of loan. And the reason for that is, especially if something's trading like near par, you're not going to have a huge downside risk on the short.
Yeah. Okay. Yep. That makes sense. Yep.
If we can show that the debt is really at risk, and we should have a big sort of a credit rating adjustment.
Yep.
It will go down, but this debt's not really ever going to go up.
Yeah. Okay.
Especially in a zero rate environment, which we had in the last few years.
Yep.
So that was timely.
Yeah, interesting. I've actually never thought about it that way, but that makes a lot of sense in terms of hedging your risk and
Yeah.
certainly also if you think the debt's at risk, it's a pretty good sign it's a piece of shit, like
Yeah.
yeah, like
Exactly.
the equity guys are gone already, but at least you're taking the risk of
Yeah.
some Volkswagen or meme sort of environment off the table. So then, okay, so like you've been doing this a while. Obviously you're targeting sort of outright frauds as opposed to like short selling on a valuation type basis.
Mm-hmm.
So and I've heard like John Hempton talk about this in the past and that sort of thing. Like across all of these kind of ideas, there's got to be some like key red flags and I guess things that they have in similar. So like what are the things that just like, stand out? Like if it's got 1, 2, 3, 4, 5 of these things, like it looks like a duck and walks like a duck, it's a duck. That
I
makes
think
sense.
I'll have to give you a list later, but just off the top of my head, I think that if we have some, it's more of the executive sales vibe is probably the biggest red flag for us.
Okay.
And I think that sort of leads into all of your other red flags. So if you have a management team that is super promotive, has almost no skin in the game, and is constantly out there like doing endless rounds of PR and not their own jobs, if they're paying stock promoters to go out and write crappy articles, they're paying some ESG wank funds to write how good their ESG ratings are on like fucking newspapers, pretending like they haven't paid for it, that kind of shit. Like holding at conferences at the MGM Grand and like putting up big presentations about things that don't exist yet.
Yeah.
That leads on to maybe all the other red flags.
Yeah. Okay.
So I think that's the biggest one for us. Like if you have a really eccentric CEO who's just talking some absolute shit, it's perfect as well, because we know if we piss them off, they'll write back and incriminate themselves a little bit further if we write a report, which is always great.
I've seen.
Obviously, I think also persecuting critics is terrible.
Yeah. Okay.
And we've had that in the past where we've seen companies sort of, go after whistleblowers. Immediate red flag.
Yeah. Okay.
I think those are the biggest two, but maybe I can find some more. I've seen some weird ones out there. I like crocodile leather shoes. If the CEO wears crocodile leather shoes, red flag.
Yeah.
And the wig test, wig or if someone wears a wig, they're red flag.
Yeah,
CEO's
right.
wig,
Okay. CEO got a wig, shorted.
red. Yeah,
Yeah, right. Yeah, it's funny, and I've seen some of that. Like, obviously, I've seen some of your reports and some of the kind of, um, I guess the back and forth between management, sort of coming back saying, no, 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 this is all, it's all rubbish, and listing off a whole series of things, and then obviously seeing you guys coming back, not laughing at them, but basically saying, "Oh my God, you're so stupid. You've just kind of admitted to like all of these things without realizing it," and
yeah.
just sort of confirmed our thesis, which is interesting. So, like I guess the big thing around short selling is obvious, and you touched on it earlier, like there's this segment of the population and segment of regulators that think short sellers are evil and that sort of thing.
Mm.
And I notice, like you publish reports, and I've seen some of the abuse that you get online and that sort of thing. So I guess realistically, on a personal level, like how do you deal with that when you put this stuff out and then all day long you're just getting this kind of negative feedback? Does that
I think it.
I would
Yeah,
find that hard to manage.
I think it bothered me at the start, and it's bad because I was like 23 or something when I started doing this. So I was like 23 years old. You get your first lawsuit and you have no money. It's pretty bad. Um,
Yeah.
And I worked in restructuring. I was basically about to like ask my restructuring firm to handle my own fucking bankruptcy. um, but now it's like comes and goes. I mean, the ASIC is particularly bad. And for context, so ASIC raided my house in was it 2022? Or
Okay.
2020,
Yep.
sorry,
Yeah. Top.
2021.
Yep. Yeah.
And
2021.
they raided my house on they believed that was insider trading. And the stocks they believed that was insider trading were Wirecard, Tyro, and Greencake, all of which I've written public short reports about, and one of which I was a whistleblower to ASIC. That was Tyro. I've also sent lots of Greencake documents, not to ASIC, but to other Australian regulators, because Greencake facilitated a bunch of Australian money laundering frauds.
Okay.
And obviously Wirecard, I was clearly a regulator internationally for the SEC and for the BaFin and whatever else. So
Yep.
that was well known. They had 6 other companies that they thought I also insider traded, which they picked out of my CFD gambling account amongst thousands of others, and all 6 of them were from Stock Tips on Betaville, which
Yeah.
is
Right.
run by the former FT guy Ben Harrington.
Yep. Yep.
And they just neglected to realize that they're all public info anyway. So they raided my house, and then they wrote me into an interview, which is a Section 19 interview, which means that you are forced to attend and you're forced to answer all the questions put out to you.
Yep.
And then after that interview, you have a gag order, which means you can't talk about it with anyone.
Fuck. Yeah. Right.
And so that's probably after the lull of being sued the first time and just dealing with all the shit that comes afterwards, that really got to me because I'm an Australian citizen, so I was in my home country. I had a gag order, and then you can't really talk about this thing to family and my fiance and my friends, who obviously all knew I got raided, but I can't really proclaim to them that I'm innocent. There'll always be that doubt
Yep.
in the back of their mind. So it took them, after the interview, it took them only a couple of weeks to get back to me and say no further action. But till this day, they haven't deleted my data.
Right. Okay.
They said they deleted images of my data, but now I'm trying to clarify whether they've deleted their internal records and recreations of my data, which I know they have because in an interview, which I can talk about now,
Yeah.
they've basically put all my WhatsApp messages on big Excel spreadsheets.
Okay.
And they refuse to answer whether or not they've deleted that data. So it's getting to the point where they raided my house, took all my shit, found out I did nothing wrong, and now are holding all my data over my head. And that includes every single one of Viceroy's working documents that we've ever done. Even companies we've not published on, probably correspondence with other whistleblowers.
Yep.
Correspondence with other regulators, correspondence with my lawyers.
Yeah. Right.
They all hold. So obviously I want that out of the way. And that's my current fight with ASIC.
Yeah. Yeah. Absolutely. That sounds awful, to be honest. Like, just going through it on a personal level, and particularly just not being able to speak about it, and everyone sort of knowing that it's happened, and
Hmm.
every time anyone asks you a question, you say, "Oh, I can't talk about it," and
And I would hazard a guess as well. Like, I think my process was pretty quick because it was very obvious I didn't insider trade these fucking stocks.
yeah,
But I mean, I know that there are other short sellers receiving this treatment or other market critics receiving this treatment, which might not have passed their Section 19 gag order dates.
yeah,
Right? Or maybe they just don't want to talk about it because they don't want to rile up ASIC again, which is totally fair.
yeah.
But we know that this is a pervasive sort of ASIC, you know,
So what's the
system to silence critics rather than actually anything useful to support the markets. Because I surely won't be writing about Australian stocks ever again until that management's gone,
yeah, yeah, absolutely.
and that's their loss, really.
Yeah, it's funny that they take an approach like that um, towards people that are, on the face of it, genuinely trying to provide them information to assist with, uncovering fraud and
Hmm.
cleaning up the market and all that
To
sort
the
of
sound
stuff.
of
And
crickets.
yeah, and
Yeah.
and seems to be sort of, somewhere in the chain internally gets misinterpreted as, an attack on ASIC or an attack on the regulatory system that needs to be, managed. So look, yeah. So, okay. So that's behind you, which is,
Mm-hmm.
well, sorry, mostly behind you in terms of the actual, I
Yeah.
guess accusation and that sort of thing. And it's now just about your data and that. Um, and
But
you've
this also
obviously,
this will also set a precedence for if this happens to anyone else in the future. I don't
yeah,
think this hasn't been tested before, right? ASIC's powers to come and take my data are relatively new.
yeah, yeah, yeah. So you're sort of like a bit of a trailblazer, really.
Yeah, that's the first I've heard of it.
No, but seriously, like, at least, you're out there and you're in the arena, put it that way.
I'm in the arena. That's a good one. It's not even Friday yet. I'm already in the arena.
That's it.
uh,
All right. So, all right. So that's kind of that side of it. So just talk to me about, I guess, like, I guess, like portfolio construction, risk management, like, I know there's guys out there that are sort of like basically long the market and short frauds and that sort of
mhm.
thing. Like, how are you constructing your portfolio and constructing position size and that sort of thing?
I don't. I can't really speak to that.
Okay.
Just the way that we're structured, but I'll give just generally though. I would say it got to a stage where we tried to sort of get a fund going, and we had to approach people and ask, "Hey, we're doing short only special situations. We're going to put 100% of the AUM into one trade." And that went really badly. So definitely, I'm not the person to ask about
Yeah. Okay.
portfolio sizing and
Yep.
positioning.
Yep.
Like I run my own little private book. Fraser does his. We have longs as well. Like we don't just produce shorts. We can do a decent long report.
Yep.
Um, but I think from just in terms of market, especially the biggest question is the market timing. How do we perform in a bull market versus a bear market?
Yeah. Okay.
That's a great question because it is actually far easier for us to find shorts in a bull market and expose shorts in a bull market than a bear market.
Okay. And why is that? Just because
I
so much froth, or
I think it's two things, right? Like, firstly, um, I think people are more cognizant of the fact that there are bad companies that are riding a wave. So if we produce something that says, "Hey, there's this company. Look, they're riding in the coattails of these people because they're also doing a drug that claims to be doing this, and they're in stage 2, whatever else." I think people are probably more receptive to risk at that point because the rest of the portfolio might do well. They're not emotionally attached to it.
yep.
But the second reason is in a bad bear market, if you run a fraud and you've been lying to investors during a bull market, you have no problem continuing to lie to them in a bear market.
Yep.
So they'll actually tend to outperform legitimate companies.
Yeah. Okay.
And then
Yeah.
trying to convince investors that they're only saving grace stock in their portfolio in the bear market is a massive fraud. is extremely difficult as well.
Yeah, okay. Because they're still promoting, they're still, they're still saying that they're looking at the end of the rainbow, and everyone else
Exactly.
is putting out guidance and earnings, guidance and
And they
downgrades.
are, well, they've become the gold standard a lot of the time.
Yeah, okay. Yep. Yeah, and then you've got everyone saying, well, what do you mean it's a fraud? It's gone up 2 times and everything else is down. Like, it's it,
Exactly.
it's my blue chip. It's my one savior.
Exactly.
Yeah, okay. And then so effectively you're not running a fund at the moment, you're just running your own portfolios like as a
Viceroy sells research. We have balance sheet partners.
yeah, okay, that makes sense. All right, cool. And then all right, so in terms of where you're at the moment, is there, obviously not going to announce things that you haven't put out in the market already, but
Mhm.
are there new interesting things that you're working on at the moment, or are you just managing kind of existing
Yeah.
stuff, or
Well, biggest thing I'm working on at the moment is my wedding in 2 days. But other than that, we
yeah,
have
congrats.
probably thank you. We have one more report due this year, which is quite a big company. It's in the 10 billion market cap range.
Cool.
We can't talk about that yet, but we have just put out a report on a company called Arbor.
Okay.
Um, it's a US bridge lender in the multifamily residential space. So
Yep.
basically, bridge lending here is in the sense of we're going to bridge between an investor or a syndicate of investors buying a multifamily residential block of apartments, to refurbishing that, to increasing the rent, to creating some stable, investment asset, and
Yep.
then refinancing that loan with some government agency loan.
Okay. Yep.
And these are all floating rate short-term loans.
Yep.
And we've basically been able to, because of the way that they're structured and the way that they increase liquidity through a collateralized loan obligation structure, those
Yep.
documents are public down to the individual underlying assets.
Okay.
That most recent report, we've been able to pull out hundreds of individual performance of individual loans within Arbor's book,
Yep.
and we can see that they're almost exclusively underwater, as in almost 100% of these loans are producing less net income than the interest-only repayments of the loans.
Right.
So yeah, I mean, obviously go to our website, have a look at the report, but that's again real estate, super boring. No one actually bothers to do any work on the underlying performance of the assets. In
Yep.
this case, it's extremely easy because it's public information. It's just hard to get to it.
Yep.
So yeah, we're following that up for a little bit and see how that goes. And we're also being sued by Medical Properties Trust,
Okay.
who claim that they're not a fraud, but we claim that they are, and they've sued us to that effect.
Right. Interesting. It's certainly a wild ride you're on. There's not
Yeah.
it's not sort of your sort of sleepy long only investment manager that's just owning
Maybe
the
one
same.
day. I'm still too young for that. I'm
Yeah,
starting to
yeah,
get the gray hairs and the receding hairline, so maybe in a few years I'll get into the long only
yeah,
fund.
yeah. Nah, cool. Yeah, all right. So then, okay, so let's like you've obviously given us like quite a bit of background, spent quite a bit of time, giving us some insight into kind of
Mhm.
how your world works and how you manage, all the issues that you got to deal with and that sort of thing. So, maybe let's just have a little bit of fun and kind of talk about, I guess, some war stories and things like that. So, maybe like, your best investment, your worst investment, or, a couple of them, whatever you want to talk about. And
Yeah,
then I guess probably the key takeaway from that is what did you learn from the experience and how did it sort of improve you as an investor?
yeah. All right. Let's go worst first. The
Okay.
worst investment we've ever made is 100% Wirecard.
Really? Okay. Why?
100%.
Why?
Firstly, I made 20. I think I made $20,000 on like 3 puts. Right. That led to me getting rated by ASIC when it collapsed. Along the way to making those $20,000, I probably lost about 60, 70 betting on the collapse every single time they were due to announce an annual report because I thought the auditors wouldn't sign off.
Right. Okay.
Um, and
So you're just
and
repeatedly waiting for the shoe to drop and it just wouldn't drop.
Right, and it wasn't only that my financial harm was inconsequential to the bullshit that the Wirecard put me through,
Yeah, yeah.
and that was well documented in the press as well, and in all those documentaries. But I don't think that the extent is well known to people. Like when Wirecard was active and running, and it got a little bit hairy for them, they would put like I think it was Libyan ex special forces spies to tail me and Fraser around London.
Yeah,
And there
right.
was like one time where I got absolutely shit faced at some party, and like I don't know what happened. I think I was outside of my street, like with no shoes on, like in the gutter, and someone took a picture of me,
Yeah.
and it somehow leaked to the press. And then they said, "Look, we're not publishing it, but we have this photo to make sure it's there." So I had to put out a tweet that was like, "If this photo ever comes up of me like face down in the gutter, I had a really good night."
Yeah.
But also things like, me and Fraser we would be chatting in Fraser's living room about Wirecard, or just having dinner with like families and fiancés and stuff, whatever.
Yeah.
And as we were having dinner, this guy on Twitter who was like a Wirecard sort of troll
Yeah.
would be live tweeting everything we were saying.
Wow.
And
Wow. Okay.
yeah, so it was weird. Like we saw this happening while we are at dinner, and we had to physically leave the table, go outside, and like discuss what was going on. There were webcams put out around Fraser's house, like tactical like
Like
cameras.
military tactical
Yeah,
camera
I'll send
stuff.
you some
Yeah.
photos later. There were tactical cameras put out around his house and his garden, looking into his house, which is super creepy.
Yeah, absolutely.
The like the wall sockets, so that
Yeah.
you used to have to put the little recorder devices for it to last long into the little wall socket, so how to charge.
Yeah.
They put their like the Samsung and Apple outlets where you
Yep.
charge your phone.
Yep.
They went into his house and replaced them and had listening devices inside those.
No way.
Yeah.
Holy shit. That's amazing. Like
So
James
I mean,
Bond spy shit.
yeah, and that's the thing. So he then we get to lessons learned, right? We I mean mostly Fraser, but Fraser discovered this company that was laundering money. Didn't realize they were laundering money from the Russian mob, which is which he also didn't realize is kind of intricately woven into the Russian government.
Yeah.
Why would you ever put out a report against that company, right? If you had known that from the start, we wouldn't.
You just let that one go to the keeper.
So that's lesson learned. There's some battles not worth fighting, even if you know you're right.
Yeah. Yeah.
Right. And this is the other thing, even if we had privately made a statement to BaFin at that point that it was a fraud, they probably still would have come after us.
Yeah.
There is
Yeah.
no whistleblower protection. Again, sorry, maybe there is now because of the lessons learned, maybe their lessons learned with Wirecard. But at the time, the German government was the fucking leakiest ship out there.
Yep.
We had to send them copies of reports before we published documents, and they would trade.
Really?
Yes.
Wow.
So, so that's a lesson learned. Some
What
battles
a
not worth fighting.
shit show. No wonder. Yeah. Yeah. That sounds like a really bad investment, to be honest.
It
Um,
was. It was. Um, Best investment we've made. I think purely on a financial basis, I think our best short has been SBB, which
okay.
I can't tell you the exact name of the company because I still can't pronounce it. It's Swedish.
Yeah. Yeah. I've seen it one
Um,
time. I looked at the report and I was like, oh, I don't know what that's called. But anyway.
uh, and again, look back to what why we like to trade the debt. We were short the perps here at 97 cents to the dollar, 99 cents to the dollar.
Yeah.
And
Cool.
these things collapsed to 30. And there was again no downside risk. They're not going to go up.
Yeah.
We're a
Yeah.
0% environment. We got it on the perfect timing. So it was, obviously we knew that these things were bad assets, but it helped that the interest rates went from 0 to 3% in the space of 12 months.
Yep.
And that was a luck of the draw. We had nothing to do with that. But that was our best trade. And
Yeah,
we
cool.
have the eccentric CEO to go with it, who absolutely hated us and would take every opportunity to slag us off.
Yeah. Perfect.
Um,
Nice.
yeah.
And then, so that kind of leads me to another question. So, just when you brought up the macro side, so does macro kind of play any role in your process at all, or? Not really.
Not really. I mean, we've had to be a bit more conscious of it with Arbor because obviously, like, if we're talking about this company that is that the entire book is floating rate loans, then yeah, like we have to be sort of cognizant of it. And then basically we had to do a sensitivity where, okay, if we had a exaggerated large 200 bips move in the cash rate, is this going to save this company? And it was still no. So then that's a good shot.
Yeah.
Right. Okay. We're talking about loans that expire within 13, like on average 13 months.
Yeah, right. Okay.
So short term.
Yeah, pretty quick.
But otherwise, not really. I mean, we don't. This is the thing. Like, if you start getting bogged down in like weathermen forecasts, like finger in the wind bullshit about whether, I don't know, like what the fucking sandalwood price is going to be in 5 years, there's going to be some idiot, like some academic, that's like, no, that's wrong. I'm sorry, sandalwood is not, like, it's a thinly traded, like nothing, made up, like vapor. Why are we arguing about this? It's not worth getting bogged down writing a report, putting some macro opinion that's just like a finger in the wind exercise for them to anchor on that. Okay, well, this is wrong, therefore the entire report must be wrong.
Yeah. Okay.
We avoid that.
Yeah. Cool. Okay, that makes sense. And then, all right. So, I guess kind of my main takeaway from the call so far has been that, well, and I kind of knew this, like short selling's hard, I think is probably a fair comment. It's not for the faint of heart, particularly if you're sort of short only or kind of targeting fraud type shorts rather than, you sort of more traditional long short hedge fund type portfolio or a pod or something. So I guess other than telling people to stay away from being a short seller, what advice would you, I guess, give someone that's, in the market and considering sort of becoming a fraud hunter like yourself? Where do they start and what do they look for and that sort of thing?
Good question. I mean, I would stay away from what everyone else is looking at. That's my biggest takeaway.
Okay.
If you start getting bogged down in crowded shorts, crowded industries where everyone's looking like this is a possible short, that's not a good one to get into anymore. You're too late.
Okay. Yep. So you gotta do the work and find your own place to be.
Pretty much.
Yeah.
Pretty much.
And then
like you have to find a niche, and then you become a renaissance man. Like I know so much useless shit about things that I don't need to know at all. Like I know forward pricing of sandalwood. I'm intimate with I have intimate knowledge of how graphite flakes are graded.
Right. Yeah.
So it's like you really have to get into the nitty gritty, and you have to understand operationally how this company makes money and every single aspect of what's going on underlying this, every single line in the P&L and your balance sheet and your cash flow.
Yep.
Right. You can't just analyze that individually and say, hey, financially, this looks great.
Yeah.
Yeah.
Yeah. Okay. And then, what was I going to ask? Yeah. So I guess in terms of the community, like, there's obviously yourself, people like John Hampton and, a few others in the market that kind of.
John Hampton is a long man, he proclaims.
Yeah. He's an interesting, like, I'm going to try and get John on the show. He doesn't know it yet, but he will when he watches this. But there's a few guys in the market like yourself that are sort of out there as kind of fraud hunters and chasing, chasing the bad guys in the market. And I guess, positioning yourself as your edge being that you're good at finding frauds and good at putting on a trade to make money. So what's the community like in terms of collaboration and talking to each other? Like, is there any kind of
Zero
working together, or is it just every man for himself?
I mean, I can't speak for everyone else, but I've been to a short seller dinner once after some conference in Berkeley.
Yeah.
And it was like, I don't know, I think it was me and a couple of the muddy water analysts and a bunch of other like little short focus funds and whatever else. And the entire dinner is like, is people trying to not talk about what they're working on and figure out what everyone else is working on at the same time. But again, like for us, we don't want to share short ideas. We want to be if we're talking about getting into a short position and the interest that we're paying on the borrow of these shares, if we're the first ones in there, we've locked it down.
Yeah. Okay.
Yep. We don't want some other guy we don't want to share the glory of the trade itself with other people. If you want to short it after we've already done it, put the report out, bang, go for it.
Yeah. Yeah.
But
Okay.
no, zero collaboration. It doesn't benefit anyone. It creates a super crowded trade.
Yeah. Okay.
Yeah.
Yeah. That's, I guess, kind of obvious now that I've asked the question. So
Yeah,
then,
but you know what? That's the biggest sort of conspiracy about me and like Viceroy and Muddy and Hindenburg and like I don't know George Soros or whatever, that we all sort of collaborate to jointly destroy mom and dad businesses that
yeah.
are committing fraud. I don't know.
Yeah. I
That's
know.
that's the biggest thing. That I think even Adele Ferguson was sort of hustled into some article saying that we all have a like WhatsApp group together and are
Some
all
private
collaborating
chat.
to
Yeah.
destroy ASX companies or something, which is 100.
Yeah. Hey guys, we're all going short SSB or SBB in the morning.
Yeah, that would be so much easier, but unfortunately, it's illegal. So,
So what is it? What is it? What is it? What does it feel like to actually publish your report? So like you've done all this work on this company, you know well in advance in your mind that it's fraud, and you're just trying to put the evidence in place to kind of support it, and then you finally get to hit the button and go, "Hey guys, here's a new one." Does that feel? What does that feel like?
I think now it's very difficult because firstly we have a really good track record over the last 3 years.
Mm-hmm.
So not only have we had to be more selective in sort of what we're publishing, it's gotten to the point where we're writing full reports and not putting them out because we don't want to. Like if there's any sort of doubt there, then we won't do it. But
Yeah.
once it's
Okay.
out there, it's great. We'll just go out like, it's probably a month's hard work, and like we're up for weeks at a time, like 12, 13-hour days, 14-hour days, no problem.
Yeah.
Um, writing these things. So afterwards, put it out, probably a week of maintenance, and then take a quick break, and then back on it.
Back on to the next one.
No rest for the wicked.
Yeah. 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 It sounds gangster. Sounds kind of gangster, actually. Um, Mate, you've been a really good kind of chat. Is there anything that you like wanted to talk about or share or say that you haven't had a chance to about anything?
I'm pretty sure we've covered off, mate. I think
Yeah, I think it's been
you've
good.
covered all the bits. This has been a good
Yeah,
podcast. It's a good chat, actually.
yeah, cool. I appreciate it. Yeah, I've had a really good time, and it's nice to get like a bit of an insight. Obviously from the outside looking in, you have this kind of perception about who someone is and what they're doing and that sort of thing. But it's good to see your face and have a bit of a chat and just
And
relax.
likewise,
And
because I followed you on Twitter for so long.
yeah, exactly.
Yeah.
And yeah, cool. All right. Well, if people wanted to reach out or if they had any thoughts about short selling and that sort of thing, how can they find you?
Well, just chuck me a DM on Twitter. My what is it? The tag now is Gabe_Bernarde.
Cool. Okay. I'll put a link up to your Twitter handle and I'll put a link up to Viceroy's page in the comments at the end of the show. But yeah, look, thanks again, mate. I really appreciated it and all the best with your wedding.
Thanks very much. Thanks for having me.
Yeah, when's that? 2 days, did you say?
2 days. There's a bit of the Aussie FinTwit community will be there, so I'm sure you see some pictures on Twitter.
Yeah, cool. All right, mate. Well, look, enjoy getting married. So obviously a big step. So I hope it all goes really well for you.
Yeah, that's the
And
worst. That's my worst investment, maybe.
nah, that'll be a good one. I'm sure she's a keeper.
I'm sure
Um,
she is.
Look, everyone, thanks very much for watching the show. I hope you enjoyed it. And like and subscribe if you enjoyed the show. And we'll see you next time. Peace.